The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. We're going to have Rich Anderson on at the half hour because I'm not able to do the commodity show tomorrow. I have a very important family function that we've been looking forward for a long time, so I won't be on tomorrow, but I'll be back on Monday. But the main thing that we need to talk about, as we talked about on Monday, is that we were looking for the market to come down in Apple around the 19th, which is Friday. And since that's going to be, it's going to be very difficult for Apple to turn in one day, I would imagine it's best to wait till Monday because you don't want it to gap down below 394. I posted into Tiger TV the chart that goes back to 2005, and it shows the four major AB equals CD patterns that have occurred. The fourth one is occurring now, the one that we've been watching for the past several months, as a matter of fact. But we are very, very close. By the way, today is the birthday of J.P. Morgan and also my good friend Arch Crawford. And so I don't know if, and someone else, Da Vinci was born on April the 15th. And I watched a program on Da Vinci last night, and they said he was one of the great minds of the world, along with Pythagoras and Einstein and Galileo and a few others. But it was a very interesting show about some of the things that he did. Anyway, what we're going to be taking a look at now is the daily chart on Apple that basically shows this ABCD pattern that we saw on the long-term weeklies. Now we're looking at it on the daily, and there's a couple of small triangles in there that shows that the time down from point A to point B and the point C to point D should be equal around the 19th of April. That's coming in on Friday. The price objective that we've been waiting for a long time has been $394 a share. The one caveat that we had here is that you do not want this stock to gap below $394 either on Thursday or Friday or Monday. So you've got to be relatively careful. One of the things that we've been watching is the $400 June call. On Monday, it was trading around 36. Right now, it's around 23. The 450 call is trading for $7.50. So if we could get that 450 call down to about $3 or $4 and get the 400 call down to about $10, I think that would be the place, to make your, wager or intelligent risk speculation, if you would like to call it that, at that point, because that will complete it. I mean, folks, when the market was at $700 a share, there ain't nobody in the world that was bearish that stock. There was not one analyst. Now you can't find a bull to even. You'd probably have to go to Pike Street in Seattle, to find a bull on fish as opposed to trying to find something that's bullish on Apple. I don't know why it's down so much today, but I do believe that we're only $6 away. I mean, on Monday's show we were $38 away, and now we're very, very close to the the price level. So the thing that we must do is to wait until we get through Friday is my suggestion, because we could very easily gap through this level. And that's what I worry about the most. Now, there's the possibility that we hit it exactly, and it turns, and that's something that we have to consider. But given the overall state of the stock market coming down and the fact that Apple has been weakest of all, and remember the old adage from the Bible. I think it's from the Bible. It says, "One of God's greatest gifts is unanswered prayers." Well, we've been waiting for this stock to get down here, and now it's here. So my suggestion is to wait a little bit longer. No matter what happens, there's not very many people that are bullish on Apple now. So even if it does have a good rally, it will have a pullback because you've got people that are trapped in this stock now. And I assume that once we go below $400 a share, which is probably some type of a mythical number, just like $700 was, there might be a little bit of acceleration. But 394 is the level that we're looking at, and if you could get that $400 call at around $10, I would just go in and get it, because you got 6 weeks to work with it, and believe me, this market has been down since August. The rest of the market has been up since August, so it can very easily do the exact opposite of what the stock market does. So don't let that bother you at all. So this is the epitome of pattern recognition and swing trading. You cannot find a better, more harmonic stock long term. We're going back to 2005. We've gone to the dailies. We've also posted in the hourlies. I mean, everything is perfectly harmonically. 618, 786, ABCD. This is Mother God and Country. This is the widows and orphans trade. This might not seem like it to the people in the old church, but it is a widows and orphans trade, because you have a very, very small risk here and a potential for a good profit. And if the stock market does turn and go back up, and Apple is finally making a bottom, Apple could actually be the leader of the pack. In 2009, Apple was the one that was the leader. When the rest of the market was going down into an abyss on March the 5th, all Apple was doing was making a 61% retracement of the low that it made in February. So it is a premier stock, and I don't think there's I imagine their iPhones are still going to be working after today, but this is it. This is all the technical things that this old cowboy's looked at through the years, and you certainly cannot get any better picture of anything that would actually show it any better than what Apple does. It's just really really a work of art when you're looking at these things. So that's the main thing that that we need to cover today, because it is very, very important. We've been watching it. Monday, of course, I'll be on the show, and we'll be able to see what it's going to be doing. But the best way to do it is to use you could do a call spread too. You could buy June 400 and sell a June 450 and take the difference. You have to be pretty sophisticated to do that, and you got to be able to add and subtract. And now we're getting into high calculus, and so I sort of shy away from that. But that's another way of looking at sophisticated options programs that might be of some help. Now, we have a big situation going on, of course, as you know, in the gold market, and Rich Anderson is going to be coming on very soon at the break, and we're going to be looking at that. And I wanted to post the long-term chart on gold, because it's gone below the 1365 level that I wanted to see. It went down to the exact 50% retracement of the 2009 low, 1317. The low was 1320. And so we've had a pretty good rally from that level. And what I would like to see, and I don't know if it's going to happen or not, but is if we could get a pullback in the gold market. And if you'll give me a second here, I will draw it out, because we are very close to doing exactly what I want it to do. And if it does do that, then we have a pretty good chance of making a really nice retracement here. And this would be the first correction that we've had in the gold market. That comes in at the 353 level. We would have an ABCD market completing at that point at 353. Now, I realize that we're 385 now, which is $30 away. But folks, listen to me here. If we can drop $170 in one day, $120 in another day, we can certainly drop $30 in a matter of a few minutes, or even more. I mean, it doesn't necessarily mean this is going to be the bottom. This is the first time we've had a possible tradable AB equals CD since this whole thing started, way back, on April 2nd when the market started to, unwind, a great deal, and that's the key that we're trying to watch when we're doing this. So that's a major point when you're watching the gold, is wait for a low risk entry point. We had that down at the 365 level, and it gave a $20 profit, and then the market went back down, and you would have been at a break-even situation at that point. Now, the next one that we want to put up is the long-term chart on the silver, and we have some interesting things about open interest that Rich is going to bring out at the half hour. At the half hour, but I wanted to put in the long-term chart on silver because there's a potential of a 200-day cycle bottoming in here, one that started in September of 2011, and it's due to bottom anywhere in this area, and they're usually pulled down, quite strongly. The thing is that we've broken some really major support now in silver, so $27 an ounce is going to be some resistance, just like 1,500 will be resistance, in the gold market. And we've been talking about the negative commodity markets for so long, it gets to be old hat. But look at copper today; it's down, I think, 11 cents. I mean, that's a huge amount. That's $350. That's $3,500 just today in copper, and they're raising margins on these as they go down, and that means that they got somebody that's got a position on that doesn't have the capital, to keep the position, and so it's sort of like the opposite of the short squeeze. As prices go down, they request more margin, and margin calls with the firms, they actually have, a 1-hour call. In other words, if you don't have the money in within 1 hour, you're out of there. And they'll depend on what your account balance is, of course, and how good a customer you are. But they do have the right to take you out at any time because they protect themselves first and foremost is the Chicago Mercantile Exchange, then the members, then the clearing members, then the members themselves, and then the houses, the commodity houses, and then finally the customers. So you've got to do a lot of protecting yourself, as we know from MF Global. By the way, I think that our justice system has to rival the greatest in the world because the judge, the fellow that lost $144 million for MF Global in these trades that he put on, he was convicted of fraud. He was sentenced to 5 years in prison and ordered to pay back the $144 million that he lost. One slight problem. He's in bankruptcy. So even though the judge told him to pay the $144 million back, I will be surprised if, that's it. Someone asked the question if it was John Corzine. Of course not. Corzine stole billions. If you stole billions, they don't touch you. If you steal a little bit of money, then they'll put you in jail. If he would have taken a package of cigarettes from a Circle K, he would have probably got life in prison. So who knows? But anyway, that's our justice system. But we'll have to wait and see. I want to mention one other thing before the break. How sick it is on TV. They have a new program coming out on one of the cable channels, and it's called what is it called? Oh, pregnancy dating. These are women that are having children without husbands that are trying to find dates. And so I think it's up for a couple Academy Awards already, but we'll have to see if it becomes a big program at all. But when I saw that, I just shook my head and I looked up at the sky and I said, "Holy moly!"
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at the E-mini S&P 500 here because we have we're very close to taking out the lows of April 15th. As you can see, we made a ABCD retracement yesterday up at the 618 retracement, and now we are completing that ABCD now. If you'll notice the time frame that I have marked there, you'll see the, if you go into Tiger TV, you'll see that the time frame to hit this will be sometime late tonight or early in the morning. That's what we would be looking at for a time frame to do it. But we need to get below 1539. That would give us a pretty good idea of, that we're heading down to complete this AB, equals CD pattern. I had one other question about Apple that I wanted to address, and that is that, we do have a gap down, and I mentioned that before on Monday's show that we have to be very careful of gaps, and we had a, pretty substantial gap down on, must have been some kind of news on Apple. And, so it's better because of gaps, you have to respect them, and you must respect these wide-ranging bars, bars that are, trading bars that are very long in length like we're having today, 20 points or so in Apple. That's a, very, very large amount, $24. That's 5% of the value of the stock. And so, we could easily drop another 5%. And, as we've seen before, sometimes that even increases. but something has been happening with Apple, of course, because it's been going down since August. But it's best to wait. The day that we were looking at for Apple was Friday, so probably the best thing to do would be to wait till Monday. That would be my recommendation. However, if you are an intelligent risk speculator and can take the risk and can get that $400 call for $10, and I think it's around probably 22 right now, that's a pretty good deal because you're controlling, 40,000 shares of Apple for roughly 6 weeks. And with that ABCD pattern, even if it's wrong, it should have a pretty good, short covering rally once this oversold condition, rectifies itself in Apple. Remember that we've had these ABCD patterns in Apple now. This is the fourth one since 2005, and that's basically it. So the thing that we're watching is to look at the June $400 call. If it gets to $10, that's $1,000. And if it gets to that point and you have the $1,000 to risk, and you'll probably have to risk it all because it's not going to be easy. But the potential on that is the market could very easily, go to 450 or even 500. So you have a 5-to-1 or 10-to-1 return if, in fact, the pattern does work. So it's not for the faint of heart, but none of these are anymore because we're having some great volatilities, which we've been expecting, and it's going to get, a lot worse. If you just take a look at this, we've shown this chart on, copper so many times about how bearish it's been, and it just keeps getting more and more bearish. So, someone does not want to own copper. That's the bottom line. I know everybody tells us that China wants to buy everything in sight. Well, they're not coming to the plate, folks. They must be waiting for even lower prices. We said it had a chance to go to $3 a pound, and we're at just under 320 now, so it's not very far away. And just a few weeks ago we were at 385 when it broke out of that widening pattern that we saw, that widening pennant that we were watching. So these are the things that we're taking care of now. The S&P is now making a low on the day. It still hasn't quite taken out the low of the 15th, which was 2 days ago, but that could happen. There's got to be some stops there, I would think, but we'll see if that in fact does occur. But that's what we're watching. We're looking for a price on the E-mini probably tomorrow, could even be today, around 15.15. And the old low we had, of course, was 14.80. That was just a few weeks ago. Then we had another run up. It's amazing, that these markets come down a lot faster than they go up, and that's why the short side, if you learn how to play it, gives you the fastest rewards, but it also, gives you the most pain, when you're, watching these things. But that's the nature of trading. That's what it's all about. We have a great situation occurring also in Treasury bonds. We've been waiting for this. Hopefully that 150 level, we'll get there. By the way, if our friend John JC would in the Tiger Den would let us know when we hit $10 on that 400 call. We'd like to know it. Let's take a break here. 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, we're back, and I think we have our friend Mr. Anderson on the phone.
You bet. Hi, Larry.
Hi, Rich. How are you?
Doing good.
Okay, I wanted to ask you to tell our folks about what's been happening with the open interest in gold and silver and platinum and what you know about of this volatility that we're having in these metals.
Well, first of all, the open interest spiked up here recently, a couple weeks ago in silver, which is it's like they sucked somebody in at the wrong time. Unbelievable.
No, that's impossible.
I don't know. I don't know why they would do that or who they. But I saw that. But platinum, it just follows the market. I mean, it seems to the open interest tops when the market tops, and then bottoms when the market bottoms. The most surprising thing is that this sell-off, the gold open interest, really hasn't dropped as precipitously as you would have expected.
Absolutely, that means somebody has some big bucks, behind them.
Right, and so they. The way it works on the floors these days, well, in the markets these days, because the floor doesn't really exist, it's all about money flow. And in the old days, if you knew somebody was overextended, you go and lean on that market and blow them out. Today, it's a much bigger thing. You got a much bigger world. If you look at the ECB, has lent billions of dollars to these countries like Greece, Cyprus, Italy, Ireland, for Portugal, to backstop their banks that are in trouble. Now, they've used as security their gold reserves. And somebody was just telling me, and I have no way of knowing what the actual gold reserves are of all these countries, but that the major banks have lost like $600 billion in the last week, probably because of the reserves. So this is a much bigger thing than just the COMEX and our exchanges. This is huge.
Would you mind sharing with the folks here in Tiger TV and Tiger Radio about how these large firms can trade, the physical gold, off the books? Will you explain to them how that works?
Well, basically, they're just doing a swap with a bank. In terms of gold, it would be banks. If they were doing grains, it'd be with a grain company, and they would just do a swap, which is an off-the-exchange transaction.
Do they get margin on those also, or is it all cash business?
Well, it's kind of a cash business, and it's kind of like it's kind of like Enron in the old days. Most of their business was swapped out in the future, 5 or 10 years from now, and so it's hard to really price. And it's not like there's nobody really controlling. That's one of the cracks in the regulatory system, as I see it. And, of course, there certainly was a big crack in energies with Enron back in the old days. And, if a main bank wants to do this kind of trades and there's nobody to really regulate it, and it's very profitable for them, it's only becomes unprofitable when, it goes
they let somebody else do it.
goes through their margin money,
Sure. Well, listen, Rich, we want to thank you for coming on, and we'll have you on soon. We'll get talking about the grain markets because they've actually held up okay during this debacle. They've had a little bit of a bounce from a very oversold condition. So we'll have you on again real soon.
All righty. Sounds good.
Okay, thanks a lot.
Thanks. Bye.
Okay, that was our friend Rich Anderson from Anderson Capital Management, giving us a little talk on the open interest in gold and silver and platinum. And the fact that the gold open interest is held up is, a relatively positive sign. Because usually when prices collapse like this, there are people leaving the market. They're selling their positions, and that actually didn't happen. That might happen soon. It gets any lower than where it's been, but so far it's held up relatively well. And as we've noticed on the long-term weekly chart on gold, there's a very, very strong support in that market, and we'll see if we can hold this 1355 level if we get down there one more time. We're getting closer as we speak, but we should test that relatively soon. The next chart I wanted to bring into Tiger TV is the bond chart. This is the 30-year bond on an hourly basis, and it shows the big ABCD that measures up to the 50% level. And that is the 786. We certainly want to be watching that. We've got a caller today, Paul from Plymouth, Massachusetts. Are you there, Paul?
I am, Larry. I'm looking at the TZA. I got in last week, and I loaded up again yesterday. I'm hoping for some big...
Hoping. This is not a good trading word, Paul. Are you long?
Yes.
Then you should be a happy boy.
Yes, I am right now. I'm just wondering, where do you think...
Can you tell me, would you tell the old cowboy what TZA is? Oh, yes. It's the Russell Index 3 times. Short?
Yes.
Okay. Well, if you bought it somewhere around, 39 or something?
Yeah, I'm in at 39 all over the board there.
Okay. Well, then what I would do is I would put my stop at 39 and go down to the Grand Caymans, maybe to the Atlantis Resort for a few weeks, and when you come back, see where you stand. Worst thing that's happened is you break even, and the first profit objective on this would be about 55.
Wow.
So it's got a potential to to have a pretty good run because this thing has been, and it's 3 times weighted, so that could be an understatement at 55. You just don't know, if we have the same type of thing occur in stocks like we had occur in gold, then then there's even a bigger problem. But I frankly think that the bigger problem will be bonds. But with this particular trade, you bought it perfectly. It was a nice 3-drive pattern there. which was equivalent to the 3-drive pattern top in the Russell Index, and now you've got a 10% lead in it, and I would put your stop at roughly right where you got in it. You're in a pretty much risk-free trade at this point. That's what trading is all about.
And then maybe move it up as it goes up?
Every time it moves up 3 points, move it up a point. That's what I would do. Use the 3-to-1 factor to do that. And the other thing is don't watch it all the time. I mean, since you're, in the Russell, go watch the euro or watch gold or silver or, copper or something else. Get your mind off of, what the stock market is doing so you're not tempted to, to sell it. That's part of the problem, because when you're dealing with money, when it goes up, you're feeling good. When it goes down, you're feeling bad. And you want to get rid of those feelings, and especially the hope feelings. Those are never any good. And, then you're far better off. But you've got a great start in this, and, it's risk-free. You can't ask for anything better than that.
Thank you for the advice.
My pleasure, and hopefully winter will be over there pretty soon, around July 4th, won't it?
Oh, it's beautiful up here today. It's nice. It's over.
What is it, about 20 degrees?
No, it's 70.
Wow, that's pretty good. Considering what you've been having, that is excellent.
It's actually almost spring.
Well, that's good. Finally.
Yes.
Well, thanks for calling in, Paul.
Thank you.
Okay, and I send all our blessings to all the folks in Boston that have had these problems, and hopefully we'll get these taken care of like we've done through the past on everything else, but it doesn't necessarily mean it's going to be overnight, that's for sure. We probably won't have any answers, for a great deal of time. Now, I want to post into Tiger TV the long-term daily chart on the Treasury bonds because we've already gone above the 61% retracement at 148 that we saw 3 or 4 days ago. We had a little bit of a pullback, and now we're heading up to the 150 level, which is only a 1.5 away. And if we get a meltdown in stocks down to 1515, which is only 25 points away in the S&P, which is equal to what we've dropped today, we could easily be at the 150 level. And if it gets there too fast, we want to wait, because the old high on these are 154, and that was the Christmas present that I talked about several weeks ago, that if we could get that Treasury bond in new high ground one more time, that would be the ideal situation for getting ready to go short. So we have to watch that at the 150 level. If it takes 4 or 5 days to get there, then it'll be a pretty good shorting opportunity, just like it was at the 61% retracement. It backed off well over $2,500. But if we get there too fast, just like we're doing in Apple, we get there too fast, we want to be careful and not enter too quickly, because these wide-ranging bars or long bars, it's like trying to catch the falling knife that Basil talked about on his show. It's better for that knife to go down and stick in the ground and then go pick it up than it is to try to catch it. Just like the old adage of trying to catch a falling safe, it's much easier to let the safe hit the ground and break open than it is to try to catch it and run away. So this is what we're trying to give you some information on the bonds here, is that it's going to the level that we've been talking about for a couple of weeks now at this 150. But there's a chance that we could easily make 154, and the old high is 156. And if we get to 160, I'm out of town, because I have to take a boat ride with Mr. O'Brien, which is not a thing that I look forward to. As a matter of fact, I will certainly try to do my best to renege on that wager. The wager is that if Treasury bonds hit 160, I have to go out on Tom's boat, one more time. I've been out there 3 times, once in a full moon and twice going on dinner cruises, and both times you wouldn't believe it. The waves were 16, 18 feet high. I mean, it was the flight from hell, or the boat from hell, but somehow we got back, and it was, it took me about 3.5 weeks to recover. I didn't stop shaking for about 2 weeks, but I finally made it through. So we'll see if they make 160, but they got to get to 150 first, and we'll find out, what happens. One other thing about the gold, they had a thing on Cyprus today that they were the cause of the reason why gold was dropping so much, because Cyprus was selling their gold to take care of their obligations to the European Union. And the amount of gold that they have, folks, is like a drop of water in Lake Michigan. I mean, that's how small amount of gold that they have compared to the rest of the gold around the central bank. So it would be insignificant. It wouldn't even move the market very much. I think the thing that we have to pay really close attention to is what Rich talked about, and that is the fact that the open interest did not move very much, during this whole debacle. It stayed pretty much the same. We've had great volume. In other words, you had buyers and sellers coming in here changing hands, but there was not a big change in open interest. If you remember, in April of last year, when silver was at 49, we were having huge drops in open interest as prices were skyrocketing, and that meant people were exiting the market. Shorts were the only people buying because longs were leaving. Once shorts exit the market, there's a vacuum there, and that's what happened. Silver went from 49 to 23. And so, this is not happening in the gold market, so there's a potential for gold here to make a pretty good bottom. And that bottom that we're looking for, and unfortunately I won't be on tomorrow, but keep an eye on that price at $13.55. That's a 61% pullback from the $13.22. It went up to the $14.02, and that pullback comes in at $15.55. So that's what we want to be watching. So the bond market is one that we really have our eye on, along with Apple and the other. And I have to show the last chart for bonds today, and that is we've been watching this on a long-term weekly basis also, and we have a potential for this really massive head and shoulders pattern in the Treasury bonds coming in up at this 150 to 151 level. It'll be perfectly symmetrical at that time, and so that's what we're watching in the bonds at this time. I know you folks listen to the TV and stuff, and they tell us that all these things that are happening are negative. Folks, it doesn't really make a whole lot of difference. We've been in this country for several hundred years as a country, and thousands of years before that. We've always made it through. We have some wonderful people. We've got great assets. We're relatively industrious. The big problem is we got a tax system that's totally messed up, and we need to get a bunch of politicians in there that realize that. Put us on a flat tax. Make everybody pay the same share. We'll all be okay. Don't give them any breaks. We all pay the same amount, whatever it is. Flat tax. That's the way to do it. And then I'm not going to run for office, of course, but that's what I think. But anyway, this long-term chart on the gold, the weekly chart, is very, very important because of the head and shoulders pattern that is coming in that matches up with the daily and also the hourly that we've posted in there also. So that's what we're looking at that point. I think this is going to be the flying Melinda. The next black swan is going to be the Treasury bond market, because I think the experiment that the Federal Reserve has been doing, and now they've roped in the European Union, and now they've roped in Japan to put out all the paper that they can. And something's wrong, because if they were putting paper out like that, gold and silver would be double where they are now and not going straight down into an abyss. So there's something wrong. And not only that, but the dollar would be tanking, and the dollar's not tanking. The dollar is soaring. So there's something not right in Camelot. So let the charts, lead you down the private path here. Let's take a break.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back. The last two charts that I'm going to post in the room are from the newsletter. Well, one of them is. That is the one that shows the optimism index, the fact that it's as high as it's been since 2006 and 2007. And, you know, we're getting reversal from these patterns, these three drive patterns that we're having in the New York Stock Exchange Index, the Dow, the S&P, and then also the head and shoulders pattern that we've had in the NASDAQ. All of those are coming, to fruition. So now that's a pretty big word for somebody from Indiana to use. Anyway, the next and last chart that I wanted to post is Apple, because we just broke $400 a share just a few minutes ago. We're trading above that right now, but $394 is the number that I'm looking at. But remember, we had a pretty good gap down today, and these numbers can go below those numbers without any trouble. The timing date that we were looking for was the 19th. That's counting the number of days in the BC swing equal to the CD swing, and that comes in on the 19th. And since that's a Friday, it's going to be very unusual for somebody to put out a massive buy signal in Apple on a Friday. But I would wait until, Monday morning and then, take a look at it and, see what really happened. So who knows? Someone asked a question about the jump in the Canadian dollar. That's basically because the U.S. dollar is so strong, and the Swiss franc did exactly the same thing. The dollar against the Swiss franc did exactly the same thing, and it was really an amazing move that we had. As a matter of fact, I will show you folks, what it was doing at that point. We were making a beautiful 3-drive pattern at the time in the Swiss franc when this was occurring, and we had it was right at a 61% retracement on the daily basis, and it's rallied well over $1,200 per contract in a matter of just a few hours. But the key one, everybody's most people here are in stocks anyway. But watch Apple. This is a chart that has every technical thing that I believe in, what I have been teaching over the last 35 to 40 or more years. It has all the symmetry, all the patterns, all the ratios. Everything is there. That doesn't mean it's going to work, but it just says it's all coming together, somewhere below $400 an ounce here around the 19th of April. That's pretty much what we're looking for that. And by the way, if I hurt anyone's feelings about my comment about the TV show, I certainly apologize. Listen, folks, live every day in an attitude of gratitude, and may God bless.